October 10th, $19 billion wiped away from crypto markets. What went wrong? Maybe it was something to do with pricing. From Supra, an Oracle provider, Joshua Tobkin joins me on the JDB Report. With me, one of the issues around that meltdown was around pricing or mispricing, particularly on the Binance order book. And so I wanted to talk to you about where do we get prices in crypto? What is considered truth in a decentralized, trustless environment? So why don't you introduce yourself, Josh? Tell us a little bit about who you are and Supra, your company, which you were co-founder of, which is in the business of providing, of being an oracle. And we'll get into what that means.
Yeah, definitely. So my name is Josh. I'm a co-founder CEO at Supra. We used to be known as Supra Oracles. These days, we're still a data provider servicing 600 data pairs from cryptocurrency, FX commodities, interest rate cuts, world events, other things, and expanding. And what happened in the recent period here is it is very interesting because this is actually a centralized system failure. It wasn't
Mhm.
really a decentralized technology problem. Um, One thing I should mention also is that Supra these days is a vertically integrated stack, layer one security. So we actually have a layer one, very fast layer one, built-in price feed oracles, smart contract platform. Automation is a big one. So Supra can do it if this or that type of logic. Blockchains don't actually have that, believe it or not. And then also cross-chain communication. But yeah, going back to the incident, what we do at Supra is we source data from multiple sources. So let's say like 20 different exchanges. And what we do is and what you have to do in a decentralized network is source it from multiple sources, do some sort of calculation methodology on that data. And I can
Mhm.
describe that in a bit. And then you need to cryptographically sign it so you have some provenance on how did this information get on chain in the first place. And then that can be fed, if it passes verification, into a smart contract. So there's major differences because centralized venues may be just consuming their own data. So they call that their own oracle, right?
Mhm.
Whereas decentralized networks, you just cannot rely on a single source for information.
Tell me a little bit about what's the difference between what you do as a provider of data that comes from multiple sources, and then you on-sell that to users, versus in TradFi, if you are a trading desk, a hedge fund or a bank, and you're getting information from, I don't know, Bloomberg or FactSet or these vendors of data. Um, is this apples to apples, or is there some differences between the way the data is found, used, integrated into a trading process?
Yeah, so I would say that the data is probably the closest analogy actually is like the Bloomberg terminal for a
Mm.
reference price in cryptocurrency. So my understanding is maybe they'll source data from multiple venues, multiple providers. They'll try to provide everything about it, including number of shares, outstanding, et cetera. And then the Bloomberg terminal can just be a reference price as to, um, what is the value currently of this particular asset or commodity. It's kind of similar in that regard because what we do, we do it in a decentralized manner, meaning there is no single aggregation process point. There's multiple, but ultimately the principles are very similar. Now, the problem with anytime you have a central system, right? Um, Maybe AWS goes out, right? And now
Right.
you can't access it. But like, by the way, we had no hiccups. We had no problems in our system when that went out because our nodes are distributed across different, hardware, cloud, different providers, data centers, and only, we have so much redundancies that we have resilience against what are called liveness failures, meaning it's not working. So while the data collection methodology might have its own unique kind of particularities in terms of like how they do it versus how we do it, We do it in a very transparent manner, in a decentralized manner. It's still very fast, though, but because of this decentralization, it's actually resilient to single points of failure. But I would say the closest analogy to TradFi is probably something like a reference price from like Bloomberg.
Is there a dichotomy between operating in what's supposed to be a trustless environment, but then the Oracle provider itself becomes, because of that process you outlined, becomes sort of the trusted provider? Do you yourself become sort of like a centralized node, a point of risk?
So that's why choosing the Oracle really matters, and you have to really dig into how exactly do they get data on chain. Some folks actually haven't published their methodology. And as a consequence, you don't really know what they're doing in their algorithm or how it's being brought on chain. If a blockchain uses a centralized oracle and that source is malfunctioning or deliberately attacked, then what will come out of that source is going to be incorrect data, and the blockchain doesn't know the difference. So you really want to have a protocol, a process, a methodology, and a cryptographic proof that the methodology has been followed before it enters a blockchain. So yeah, in short, it is very important to decentralize Oracle as well. Otherwise, it's no different than having a single point of failure.
How likely is it that people would you be using multiple oracles? I mean, do they just choose one, or is it important that there be multiple of your types of services in a given environment?
Yeah, so our type of decentralized Oracle design, we have a very particular approach, but there are competitors and others out there that offer some level of decentralization as well. For an application, it's very common these days for them to just use one source. However, we have seen more and more in the last couple of years that a protocol will actually blend multiple oracles, so multiple decentralized oracles, and blend them together to have even more resilience. That is actually a recommended approach. There is more protection there, but the trade-off is cost because now you have to pay for three verifications instead of one. But I would recommend in general that if you can swing it, if you can justify the cost, you should do it. Um, this while each of our independent services are designed to be globally distributed and decentralized, right? Uh, there's just sometimes so much on the line that it's useful to have redundancy. Now, in centralized systems, they don't have this. They don't rely on decentralized oracles. They're saying, we're the source of truth. Why not just get it from ourselves? But as we have learned from the recent issue at Binance, is that if they're their own oracle and they have a malfunction, they don't know that they don't know that it might be malfunctioning, you know?
Right. They think that number is the number.
Yeah.
With multiple oracles, is there also the risk that you're all pulling ultimately from the same pricing mechanisms? I mean, do you actually get diversification benefit, or do you end up with even greater concentration risk because you guys ultimately come from a limited pool of original data?
That's a good point. Now, there are always going to be a limited pool of version data because the activity happened at some venue, right?
Right.
So we do mostly all tap into these things. Nonetheless, there's many. So no single, even though, for example, Binance may be a dominant player, they're not more than 50%. So price discovery doesn't happen there only. It has large influence. Now, the way that these kind of oracles work, for example, our nodes on Supra will be assigned a random set of data providers. Originally, we were just saying just connect to everything, but we realized, oh, actually, it's sufficient for you to just connect to maybe, uh, you know, 51% of the data providers we offer, and just some random combination. And then we have multiple of these Oracle nodes that are ingesting this information independently from these different various data providers. There is definitely overlap, though. Now, what they themselves do is they collect the information from these data providers. They themselves basically identify the median value that they are receiving, the median, the middle value, and then they submit it to uh, what we call an aggregator, Oracle aggregator that's receiving all these inputs. Remember, each of these nodes are getting data from many sources. Some of them are definitely overlapping. They calculate their median value that they see. They submit it to each other, and an aggregator combines them and identifies what we call a coherent cluster. How many of these values are within a certain range from each other? And then we take that kind of like, middle cluster, and then we average it. And what happens here is when the kind of situation occurred on Binance, that deviated too much from both the median that we're getting from many sources as well as this coherent cluster calculation. So it actually was not counted in the ultimate price that we reported. It was the follow-on effects, maybe 20 minutes, 30 minutes later, where Binance kind of had a little bit of a cascading situation where this affected other exchanges. Then at that stage, when the kind of this protected kind of average, this median that creates a coherent cluster, and the average of that, then at that stage, the value was starting to be affected because that is what we believe was the actual price of the asset at that given moment. So if one venue fails, it doesn't drag everything out immediately. Like for example, there was a flash crash. It happened, and then a few minutes later, kind of started to correct. Um, that we didn't have that drastic of a drawdown. Now, almost all the cryptocurrencies did experience a significant drawdown, but not to like one penny, not 99% down, like both the Atom token, for example, or USDE went from $1, was supposed to be kind of algorithmically pegged, so to speak, to $1. It dropped to like 68 cents for a couple of minutes there. Our That did not affect all the other exchanges immediately either. So that specific moment, that flash crash, did not register in our ultimate report, and that is a level of protection that you do want to have.
To what extent, sort of smoothing out I guess the ends of the bell curve in terms of what these prices are meant to be. What's the difference between that and in TradFi if you think about a human process of doing that? So I'm thinking about the LIBOR, the way that LIBOR used to be calculated, which then became a problem because traders were colluding to determine what they thought the price should be, and this was then setting essentially the foundation for interest rates around the world. Um, is there a risk of either by accident or by malicious behavior that this process could be similarly compromised?
So, very good question. I mean, the LIBOR situation, as you described, was a case where there's basically internal collusion, and that lack of transparency gave them an edge as they can influence the outcome. Um, the way this would happen is you would need basically 51% of the data providers, these other exchanges perhaps, which are generally competitive, to collaborate with each other, and then to not ring the alarm bell that, hey, look, so on and so forth is trying to get us to do this. It's very unlikely to happen. But
Right,
the truth of the matter is, if the data sources did collude, there's nothing we could do.
right. Okay. Um, what also is the role of an oracle? Is an oracle or a data provider meant to have some way of providing context to a price? We saw with the event the other week that we saw these huge market movements, and there was no way from the internal pricing to tell if these were legitimate, if this was in fact the price or not. And there was no actual issue with, say, solvency, but these suddenly became super under collateralized positions, which led to a lot of liquidations, even though that was really just I mean, it wasn't true, I guess, in one sense, but it became true. So, is there a role for oracles to try to add that sense of context? Is it their job to, or are they going to be expected to help with that process, or do they need to stay above that level of interpreting what prices mean?
2 days after that event in Hong Kong, I just met for some green tea a friend who was with another friend who happened to be working at one of these top exchanges, or the one where the incident happened. And, that situation it was, from what I can gather, kind of a failure of their system that maybe got overloaded. Something unexpected happened. It triggered a bunch
Mhm.
of other transactions and follow-on effects, which overwhelmed their server, right? Which couldn't process requests. And then because requests weren't getting processed, like algorithmic traders were submitting even more requests,
Mm.
overloading it even more. So they just got seriously overburdened. Um, in that case, that's what kind of caused such a drastic adjustment to kind of the underlying collateral, at least in terms of what is the price for that moment, and then all the liquidations, et cetera, based off of that liquidation price or what that oracle price. But that's a single venue oracle. So just to kind of get to the root of it, I know there's a lot of kind of theories that perhaps some malicious actor was trying to do something to USDC, USDE, Athena's approach, where they maybe have dumped 60 to 80 million all at once, which by the way is very unprofessional. You should never do that. You should do it slowly and across many venues. So in that regard, you can kind of see that to be somewhat of a attack, and then what happened, I think, was the system kind of, the price as a consequence kind of cleared out the order book. There's some anomalies and probably had these cascading, engines that are like risk engines that are turned on. Then the system probably just got overwhelmed, and then it got compounded by the fact that the algorithmic traders that are working on sub-second timelines are saying, "Wait, what's failing? Let's try again and let's scale it. Let's scale the request." And the system literally just had, I think, in my opinion, crash server plus a DOS denial of service attack as a consequence. Um, Now, what could possibly, and what I discussed with this gentleman, was these centralized exchanges should consider ingesting multiple Oracle services, decentralized services. And it's interesting because his response is like, "Oh, there's no way we would do that." I was like,
Mm.
"Oh, but hear me out." And basically, what I was saying is ingest it as a reference price. Like, what's the rest of the market doing? And if you are deviating way too much from the rest of the market for more than, let's say, 10 seconds, maybe you're detecting an anomaly. So it's like almost use it not to price your assets, but for anomaly detection, you know? And then maybe at that stage, remember these centralized exchanges, they're more TradFi than decentralized technology. Um, you might want to borrow some ideas from TradFi, including circuit breakers, cool off periods, that kind of thing. That's not ideal because we say crypto is 24/7, but centralized exchanges by definition are centralized services. So my suggestion recommendation to them and in general actually for all exchanges is to ingest Oracle from Supra, from Chainlink and others. Use it as a reference price. See if your reported output for that particular pair is deviating for too long and too extreme, and then let that be an opportunity for you to trigger some sort of anomaly detection and maybe pause that market for some period. Now it's complicated though because of the following. Let's suppose that this flash crash happened in USDE and it happened so fast, and then the anomaly detection kicked in. And suppose they had the setup that I was describing, and then they
Right.
pause things, but then they pause it at 68 cents. That could be, in some sense, even worse. They may
Right.
actually have to pause the entire platform, not just one pair, because the USDE might be used as collateral elsewhere. So in traditional finance, what they might do is circuit breaker and then
Mhm.
kind of like with a rollback, you know. You might do that in a stock exchange, for example. Um, Centralized exchanges are not really any different. The difference, however, is that there are decentralized venues that are going to continue to process. So I think that's a reluctance into why they would ever want to have such a system. So this is a complex situation. Um, I mean, you know that these exchanges are running monstrous machines. They have definitely done stress tests, but this is kind of an unprecedented kind of level that just something went wrong, something with their logic that kind of cascaded and then clogged their system and literally caused their servers to kind of buckle down. So I don't have the full answer here, but I would say it would be still wise, at least for the internal backend system and team, to use our decentralized Oracle data as a reference price to detect anomalies and to have just a better clarity as to what's happening with the rest of the market instead of their just single venue.
Yeah. Okay. Great. Josh, that's been really helpful. One last question for you. This all happened so fast because we're dealing with automated market makers, automated pricing, etc. Is there any space for a human in the loop with these kind of situations?
Humans are way too slow. So to the only way I could imagine it, human in the loop here, is if they did have a circuit breaker and they wanted to roll back, then yes, you would definitely need humans in the loop there to determine what to do. Um, but I know that's not going to be a very popular subject at large in our industry. Um, In terms of like, yeah, it would be too difficult to have humans involved in this directly because you can't have a single person that have like the keys to the kingdom. It'd have to be multiple people. They'd have to be available. They have to co-decide what to do. They have to analyze it, and then they have to sign it or approve it. And it would take probably an hour minimum. And then so human in the loop for Oracle is very difficult for this type of thing, for price feed oracles. Now, that said, there are, just as we're on the Oracle topic, the scope of what we've been discussing is for price feeds, right? But what about like prediction market resolution, which are a little bit more subjective or event-based, kind of like, okay, this happened or not at this time. Price feeds don't handle that. So you need a different type of Oracle for that. Now, what we are building at Supra, and this is about to go to testnet, is something called Threshold AI Oracle, which is basically a group of AI agents, different models. They get through a query, they do their process, they debate with each other in natural language. You can actually see the words that they're saying to each other, and then they summarize the result, and then they basically reach consensus or not on the outcome of the summarization. And then if they agree, then they can publish it and sign it. But even that process, it takes like 10 seconds, right?
Hmm.
Now, human in the loop is relevant for that process. Suppose that for some reason AI agents hallucinate. I mean, the whole point of this design is to use multiple different models to prevent a single agent from hallucinating. You'd have to have a threshold of them to come up with the wrong answer. But it's still possible. It's unlikely, but it's possible. So for the threshold AI oracle, we call it tau, TAO. It can answer almost anything. However, we can't just say whatever its output is definitive immediately. Unlike our price feeds, which we're saying here it is. It's been signed, 99.99999% confidence, it's correct. In the Oracle case, because it's more subjective sometimes, you have to introduce a challenge period. Now, the challenge period doesn't have very long, it could be like 1 hour, where any human can come in and say, hey, look, I'm putting up $1,000. I'm saying this is wrong. Here's my bond. And if I'm delaying the outcome of this market, whatever it is, and it's determined that I'm wrong and I'm just delaying it, you keep my $1,000, right? Um, Most of the time, this will not trigger, but it's a good fallback to have. This is the only type of incident where human in the loop is necessary in my point of view.
Very great. Josh Tobkin from Supra, thank you so much for joining me on the JDB report.
Yeah, good to be here. Thank you.